The market is a mirror. It reflects not just the price, but your patience, discipline, and mindset. Hey traders, welcome back to Your Nifty Guy. Before we dive into Monday's trade plan, let's quickly revisit today's market price action and compare it with what we had discussed yesterday. Did the market follow our script or go off track? Let's find out. If you are enjoying these daily insights, make sure to like the video, subscribe to the channel if you haven't already, share it with your trading friends or communities that you might be a part of, as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to everything. On that note, let's get straight to the charts. As usual, the video will be divided into two parts. First, we'll be discussing about what we had discussed or what we had planned yesterday versus what happened in the markets, how did we play that, and all the criteria surrounding the particular trades. And the second part will be the where we'll be discussing about the trade plan for Monday as well as the overall general price scenario. So this is going to be a weekly analysis. So make sure to watch the video till the end so that your takeaway from the video is maximum. And then again, next week can be a good profitable trading week for you. Uh, so yesterday, what we had discussed is that we need to see, depending on tomorrow's price action, whether this was just an expiry move, uh, which had actually trapped all the people who had been shorting the market since a long time, or this is just a continuation, or this trend will be continuing on the upside. Now, the markets opened with a gap down and immediately went into a selling mode. Now, as per our setup, we needed a closing below this particular zone, and with the pullback, we were ready to short the market. And this is where the first trade of the day for me was. After this particular pullback, this is where I entered into the shorts. The SL was right around here, but then I got out on this particular candle, right? So, as per the trailing system that I use, this was the exit candle fulfilling all the conditions. So I was in a short trade, and this particular candle's low was higher than previous low, high was higher than previous high, as well as the closing was above the previous high. And that is the exit criteria for me in a trade which is on the short side. I got out of this particular trade on a cost to cost basis. If I would have held it, again, it would have given me very good rewards. But then again, I am somebody who will follow my rules to the T. If I have fixed my stop loss and the stop loss is triggering, I will be taking it just like in yesterday's trade. And again, so this is where I got out of this particular trade. Post this particular trade, the price action was a lot haphazard. So in case if I was also discussing or speaking to someone about Siddhesh, to be named in particular, one of the followers of this channel, about price action, market structure, and Dow theory. So again, this is something which you guys need to train your eyes for, and with time, this will be all you need to do is connect the major swings, right? So if you look carefully, Dow theory majorly speaks of price action and the market structure basically. And if you just connect the major swings, you will be able to draw the price action or the market structure. And uh, if you train your eyes enough, this is one of the simplest things that can be done. There is an indicator around it which will auto plot the market structure for you. I do not know. I had seen it somewhere. I will try to find it over the weekend. And in case if I get hold of that, I will be sharing it with you so that you guys can who people who are having difficulty in plotting the market structure, trying to understand what is being happening in the market, the indicator will plot it out automatically for you. So see, around here, the market structure was absolutely clear. Although we had gotten out because the trade, again, the stop loss was around here and we could have waited. But then again, I am not too very sure because again, number one reason we are very close to this particular major gap area from which the market had given such a big ride yesterday. And it is my simple rule to get out of the trade if this particular candle is something which is forming on a 5 minutes time frame. And that was the reason. Post that, see, the market structure was actually haphazard. Again, a higher low was created, then a lower high was also created, right? So this is a sign of a sideways market. Then again, this low was broken. And as soon as the low was broken, not just this low, but the subsequent low also, the markets immediately went on up to create a new higher high, which was almost equivalent to this particular high. So there was no clear price action or the market structure which was there, right? Post this, again, the markets started forming a higher high, higher low structure. Try to understand. After this, around here, the market structure was clear. It got haphazard around here. Now it does not actually get haphazard. This is just market taking in liquidity. And after this, again, the market followed the lower high, lower low structure. And I entered the second trade of the day when this low was broken around 250 in this particular candle. I had placed the stop loss just above this green candle's high, and I exited this trade around 315. Yeah, around here. So normally, in case if I have entered lead and the trade is going in my favor, I will keep on holding it. But no new entries are created by me after 230, 245. Since I was in this particular trade since 215, this was the reason why I continued and sat in this. So this low was the day's low, and in this particular candle, the 210 candle, which triggered the day's low, this is where I had entered. Honestly, I thought again I will be a part of the liquidity trap and this will just be taking liquidity from here and then going up. But then because my stop loss was around here, so once you enter a trade, it is either the market is either first triggering your stop loss or going in your favor. If it goes in your favor, you trail. If it does not goes in your favor and goes and hits your stop loss, you take the stop loss. Uh, Market did go up and immediately after my entry, but then again ultimately came around. And once this swing was formed, I had moved my stop loss till around this level, which was lower SL then, but then again, market eventually around close. So there was a big sell-off which came in around the closing, and the trade ultimately ended in green. So ultimately, overall, a good trading week, a good trading day. So I hope the simple concept of market structure and how I use market structure to trade. So what we do is we plan our trades, in-depth analysis of the planning, and we use the fib levels to mark out the support and resistances which can be there in the market or the levels of reversal which we can look for. And then based on how the price is reacting around those levels, as well as important, we pay close attention to important locations like previous day high, previous day low, previous day closing. And then based on everything, we will take intraday trades. That is what I personally do. Now, for Monday, number one thing will be first starting off with the weekly analysis. I'll be moving order drawings, simple, pure price charts. So now this is again a very rare phenomenon which happens very rarely, which is 6 weeks of negative price on Nifty. Now, even if you are to go in the past, it's 4 weeks around here. So this will happen very, very rarely. 6 weeks of negative price action on Nifty. Again here, 3 weeks, 2 weeks, weeks. I believe around COVID it would be 2020, yes. So this was 1, 2, 3, 4, again 4 weeks, right? Post that market formed the bottom and then rallied all the way up. I am not considering this particular candle as a negative candle. Around here it was 1, 2, 3, 4. If we take this 5, and again 1, 2, 3, 4, 5. So 6 weeks is roughly 1.5 months of Nifty being in a negative zone. So that is a rare thing which happens. So will this be continuing or will be seeing certain pullbacks? That is something which will not be predicting. We'll wait for price action to confirm before we ultimately plan our trades. So again, on a daily, we are near, just a second. Yeah, on the daily, we are near this particular gap area, which is there. And, the market is actually lacking momentum right now. Even if on the downside, you will see the momentum on a daily time frame is quite sluggish, except for these 3 days wherein there's good momentum. Again, there's a lot of sideways price action. Actually, that is how price will actually be moving in a daily or time frame. It will not be moving in a straight line. It will be doing its zigzag pattern, and that is how we need to tackle. That is exactly the thing that we need to tackle. Now, for Monday, we'll keep the plan very, very simple. We don't need this. We don't need this, right? Because the support has already been broken. Now, try to understand this particular low is a 2-day low. We have closed near the low. There might be a lot of people who would have missed out on this particular down move because people would have been anticipating that it would be a continuation market, whereas today both our trades were on the short side. Again, one of my really setup which is very close to my heart, and I'm waiting for it to happen in the live market so that I can demonstrate how it happens. It is a rare structure. It will happen very rarely, but when it happens, it is a good trade, right? So it is a good trade to look out for. So what we need is markets on Monday to give us a flat to very negative opening, and we need a negative closing below this particular red line, which is the 2 days low. And then when the price moves above the high of this red candle is where we initiate a long trade. Now, this is a contra trade. The quantity has to be small, right? Because the overall trend right now is selling. So the quantity has to be small with a very strict stop loss. If the trade hits your stop loss, do not wait in hope that the prices will again be reversing. Please accept the stop loss and move on to the next available trade. And if you are into profits, trail it very, very closely, right? Do not let a green position go back into red or even cost to cost. So this is the first trade setup that I am looking for on Monday is a negative closing, negative candlestick below this particular low, and then the high of this candle being taken out is where we can see a trade on the long side. We'll quickly be drawing our fib zone, right? In case of this long entry, make sure to book your positions around here. The price action based on price action around below this today 2 days of low, not today's but 2 days numerical 2 days low, which is yesterday and today's low. We can look for a short entry with a pullback. Prices can take a resistance around these levels again, and again, based on negative price action we can take a short entry. Any long entry is to be taken only above this particular zone. Now, try to understand one thing which I'm not marking it out on the charts, but then again, it is for you to observe because I don't want to mark it out on charts and people. There are certain people who just see the image on Instagram or on uh, Twitter or X, and then they will be taking a trade. So this gap area, this is a pretty big gap area, and this can provide some support. This is also a trend line which is coming in of the parallel channel, which we are trading in since a long time. And in case we are already near the trend line and we see some positive price action around this, because this gap area will be acting as a major support around these levels. If you look for a double bottom or any positive price action, you can take a small risk of a reversal trade and play it for upside, right? So I'm not marking it on the chart for obvious reasons, but then again, this goes without saying that again we are near trend line support. We are already in a support area, so we might as well look for a buying opportunity if the price action confirms, right? So everything is if the price action conforms to it. So we need to again, as the going says for this particular channel, we don't predict anything, but we are prepared for anything. So it is not necessary that if the price action is negative, negative, negative for 6 straight weeks, it has been negative, we cannot take any long entries. Even in this entire journey, we have of the 6 weeks that the price action has been negative, we have made money in calls, we have made money in puts, right? So as traders, you should be prepared for anything. You should not be biased. Obviously, you should have a bigger time frame bias, which should be there. So that is where you take your position sizing into your hands. Whenever the trade which is in confirmation with the trend on higher time frames, that is where you can go in all out with full positions, and where when that you are taking contra trades, you can go with half the quantity that you usually trade in. So like this is a trade which is a contra trade, and that is something which you will be trading in lower quantities. If around here you are getting a buying opportunity, you will be trading in lower quantities. So as simple as that. So I hope the plan of action is extremely clear, and I hope you guys have a good weekend. I will see you guys again on Monday, post the market. Till then, enjoy your weekend and yeah, stay safe in the markets on Monday. Do not predict, plan. This is your Nifty Guy signing off for today. I'll see you guys again on Monday. Cheers. Thanks for watching.